The following is a presentation of TFNN. Live at TFNN, Breakout Investing, with your host, Ken Shreve.
Greetings, everyone. Happy Monday, July 30th. Ken Shreve with you on TFNN. Welcome to another edition of Breakout Investing. Every day, daily show now from 3 to 4 Eastern. Number to use to get through. This is a live show, so if you want to talk the market with me, you can give me a call toll free, 877-927-6648. Show is available as a podcast on iTunes, so if you can't listen live, be sure to check out iTunes and you can download the show there. You can also listen to all TFNN programming on your smartphone. Just open your smartphone browser, type in 8 letters, TFNN.mobi, TFNN.mobi. I think it's pretty intuitive. It just says, click here to listen live, and you can listen to the stream that way as well. And if you want to look at charts live along with me during the program today, you can do that on Tiger TV. You can access Tiger TV on your smartphone, and you can also access it on your PC, of course. And you can do that at TFNN.com. Click on Tiger TV. The show is carried live on Channel 1, and it is archived on Channel 13. All right, let's start by taking a look at the NASDAQ 100 today. NASDAQ 100 facing a little bit of resistance here. You can see three separate times the index has bumped up against this 2660 price level, and it's having some problems popping through here. So we did get some breakouts in the S&P 500 and the Dow, not the NASDAQ composite yet. Still waiting for a breakout here for the NASDAQ 100, and frankly, I'd like to see one. I'd like to see these large cap tech stocks, a lot of large cap tech stocks really start to lead the market. Many are continuing to act a bit sluggishly. Today inside the NASDAQ 100, take a look at shares of CTXX. This is Citrix Systems, and we'll see that shares of Citrix are getting walloped today, down 6.3% to 72.94. 72.94. That's the last on Citrix Systems, and some other NASDAQ 100 names under some pressure today. Let's check in on shares of Intuitive Surgical, another NASDAQ 100 component. It's lagging the market pretty badly today, down 2.2% to 487.89. Check in on Baidu, which Baidu still has its fans out there, and they delivered pretty decent earnings last week, but stock is underperforming today, down 2% to 121.27. So sellers have been in this stock for quite some time, only just recently started to come off its lows around 105, 110 bucks a share. Now around 121.27, but still damaged goods here in my book, and not a stock that is in not buyable in terms of the buy rules that I follow. And then Starbucks is another NASDAQ 100 stock. It remains under selling pressure, of course, weaker than expected earnings late last week. Stock had a big gap down in price from 52 down to about 47, 48 bucks a share. Now it's down another 1.3% today to 46.85. So some lagging stocks in the NASDAQ 100 today. Let's move over, take a look at the composite, NASDAQ composite, selling pretty tame in that index today. You can see it has not broken out yet either, but it is trading near its session low today after hitting an intraday high of 29.70. The composite is now trading around 29.42. Let's call it 29.42, down about 0.5%, 0.6%, call it about 16 points. So tech stocks still under a little bit of pressure here. And the S&P 500, good solid breakout for the S&P 500 last week on Friday. Good volume behind the move. Fairly contained selling today, only down about 2.5 points, 0.2% to 1383. And why not? We'll check on the Dow Jones Industrials because it also broke out Friday nicely. It's where a lot of the strength in the market has been in recent weeks. if you're a growth investor like myself, and I run a aggressive growth model portfolio at TFNN called Ultimate Growth Stocks, and it's not quite our market yet for growth and aggressive growth investors. You're getting a lot of movement. Names like Coca-Cola up big for 3 straight days. A lot of dividend-paying stocks. Your AT&Ts, your Verizons, consumer staple stocks, kind of safe haven, safe play stocks, and it's still a bit of a rocky market environment. So it's not exactly the perfect environment here for aggressive growth and higher beta stocks, but I'm not worried because I know we're gonna have our day at some point, and I suspect it's going to come before the end of the year. So I've got some names that are working nicely, but the types of stocks that are working right now aren't exactly the types of stocks I target. And again, I would put a Coca-Cola, Dow stocks in that group. But right now, the Dow Jones Industrials down 19 points, not much selling at all there to 13,056. That's a quick look at the major averages. Tech stocks weighed down today, not only by the NASDAQ 100, but the Philadelphia Semiconductor Index. Let's check in and see what the SOX was doing today. At last check, it was lagging the market pretty badly, and it still is, down about 1.4% to 378.99. That's the Philadelphia Semiconductor Index at its session low here. The 50-day, it's going to be the 200-day moving average for the SOX at 391.50. That looks like it could be a resistance level at this point. So at 379 thereabouts, it's still about 10, 11 points to go before it gets to its 200-day moving average, and we'll see how it acts around there. Shares of Equinix today downgraded. This was a good, powerful breakout. Company reported earnings last week. Nice gap up. It was a gap up from a base-on-base pattern. Stock hasn't fallen apart, but it did get a downgrade today from Citigroup, so it's down 3.1% to 180.99. It is still within buying range after the price drop today. Volume doesn't look overwhelming despite the downgrade, but Equinix is a data center operator. Shares were downgraded to neutral from buy at Citigroup before the open today. That caused some selling in some other cloud names. But before we get to that, let's take a look at a weekly chart for Equinix, and we'll see a good solid technical breakout from what I would call a base on base pattern here. You see the first base forms here. A breakout doesn't really go that far due to underlying selling in the market. It comes down again, consolidates quickly, and then breaks out powerfully again last week over about $180, 179, 180 thereabouts. So this one's still within range here. The question is, you're in an environment where it's not exactly a friendly environment for growth stocks like this breaking out. I've said it many times in recent weeks, technical breakouts in heavy volume, especially in growth and aggressive growth names, they need the right type of markets to work. And the right type of market is a market where uncertainty is starting to subside. There's always going to be uncertainty in the market, but when you get into a period of time where uncertainty starts to subside, and we actually could be, getting near that, or maybe we're already there in the market with, the Fed meeting going to conclude on Wednesday this week, a 2-day Fed meeting. We've got the ECB meeting, European Central Bank meeting later in the week on Thursday. We've got a jobs report, trying to stay confident that we're going to see some sort of decent data in this employment report Friday. But you've got 3 kind of layers of uncertainty in the market that are going to be addressed this week, one way or the other. And if the news is better than expected, if the market likes what it sees, likes what it hears, perhaps we get some more levels of uncertainty peeled away here, and new money starts to come in from the sidelines. That should improve the environment for growth stocks like Equinix and obviously scads of other stocks out there. So we'll see what the data look like later in the week. We'll see what the Fed has to say Wednesday after their meeting. We'll see what the European Central Bank does when they meet on Thursday. Of course, they're going to be talking about high borrowing costs in Spain and Italy. These bond yields, the market likes to fixate on this 10-year yield at 7.5%, 7%. It's kind of been bouncing all around lately, but apparently later this week the ECB is going to talk about ways that they can, keep borrowing costs low for some of these troubled countries there. So that's where we're at. Fairly mild losses for the market today, but a lot of red in my growth screens today. Apple, let's take a look at Apple, another NASDAQ 100 name. At last check was outperforming the market, up 1.3% today to 592.80. Hit an intraday high of 599, so it's trading right in the middle of its range, maybe a little bit in the bottom half. Did manage to reclaim its 50-day moving average on Friday, a little bit further above the line today. A lot of headlines around Apple. They, of course, have some new products coming up, the iPhone 5, possibly the iPad mini. Today is the first day of jury selection, a trial up in Northern California. Patent infringement suits. Both Apple and Samsung claim they each infringed on each other's patents, so that trial is starting today. And interesting that it's being held in Silicon Valley. That's where all the jurors are. So not really sure this is going to be a completely fair trial for Samsung, considering that it's being held in Apple's backyard. But so it goes. Other news out of Apple today: they said downloads of its new Mountain Lion operating system topped 3 million in just 4 days. That's the most successful operating system launch in its history. So good news there. And late last week, I remembered IDC came out with an interesting smartphone data, and it surprised me a little bit. Maybe not. Maybe it didn't surprise you, but the data showed that Samsung's global smartphone shipments in the second quarter came in at 50.2 million. Apple shipped 26 million phones in the second quarter. So Samsung is dominating in terms of global market share at this point. They have now 32.6% of the global smartphone market. Apple's market share declined in the second quarter from 24.2% in the first quarter to 16.9% in the second quarter. So it'll be interesting to see what Apple does from here. It is forming a base. It was in the process of forming a decent technical pattern, a bullish cup with handle. Of course, its earnings report really surprised a lot of people by the amount that they missed, the earnings shortfall and the sales shortfall as well. But obviously a tough company to bet against here. And again, its trial with Samsung starting today in Northern California over a patent dispute. Let's take a look at shares of NetSuite today. I like this stock here. Been doing a little work on NetSuite. A big gap up for the stock on Friday. NetSuite is in the same business as Salesforce.com, on-demand customer relationship management software. They also do enterprise resource planning software, which is ERP software. Big gap up for the stock Friday on strong earnings. Still looks to be in buying range here with a swing point of 56.06. Again, just because it's in buying range, just because you had a big breakout in heavy volume, you do have a market in an uptrend here. It's still kind of a fickle, tricky market for breakout. So when you buy one of these breaking out in heavy volume, even though it looks like it's being accumulated by big investors, some of these are working and plenty of others aren't. So it's really just got to be a good stock picker here. But I like NetSuite very much, like its growth prospects, and talk a little bit more about NetSuite when we come back. Ken Shreve on TFNN. We'll be right back.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows. Plus, see all the charts as they happen live during those shows and have access to archives of those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks, to Breakout Investing on TFNN. Ken Shreve with you. 877-927-6648. That's the number to use to get through if you want to talk to me about this market. U.S. dollar index today, not up by very much at all, up 11 ticks. Call it 0.1% to 82.82. Take a look at the UUP. This is the PowerShares Deutsche Bank U.S. dollar index bullish fund, probably the most liquid long U.S. dollar fund out there. Fell below its 50-day moving average last week, hit an intraday high today of 22.81. Its 50-day is at 22.77, but at this point not able to hold that 50-day line. So dollar is definitely looking vulnerable here, which could be good news for stocks. So we'll see. Obviously, a strengthening dollar is going to be a continued headwind for the market, but looking at the UUP right now and the action over the past 3 days around its 50-day moving average tells me that UUP could be getting a little tired here. So we'll keep our fingers crossed for a weak dollar, because we want, at least I want, this market to go higher. I want money to come in from the sidelines here and, start taking advantage of some good long opportunities out there. So before we went into break, we were talking about NetSuite. Let's take a look at shares of NetSuite again. Like this company a lot from a fundamental and technical perspective. A big move for the stock Friday on better than expected earnings. Their earnings of 6 cents a share was up 200% from a year ago. Sales were up 29% year over year to $74.7 million. Again, we're talking CRM software here and ERP software, enterprise resource planning. I think this one, could be an emerging leader base. The swing point here was 56.06. Right now it's at 56.20, so it's trading right around that swing point. And growth prospects are huge at NetSuite. You're actually looking at accelerating annual earnings growth this year and next. For 2012, profit is expected to rise 47% from 2011, and next year in 2013, that growth is expected to accelerate up 55% from 2012. So this company is selling a lot of product, and I think it looks pretty good here. Taking a look at crude oil today, down 0.4% to 89.78 a barrel. Not much movement in the oil market. Also a quiet day for gold, but it did extend its winning streak to 4 sessions Monday. It rose another $1.70, 0.1% to $16.1970, $1,619.70 an ounce. Let's check in with the GLD. And we'll see that the GLD right now is almost unchanged, down 6 cents to 157.48. It hit an intraday low of 154.81, but it is well off its lows. In fact, up near its session high with almost half hour left to go in Monday's session here. Fertilizer stocks still look interesting out here. Let's take a look at Rentech Nitrogen. That'll be ticker RNF. This is a fairly recent new issue. They came public in November last year at $20 a share. It's a $30 stock now. Trading near its session low, but still up almost 2% today to $30.16. Trying to break out, I would call this a cup with high handle chart pattern. So you've got your U-shaped pattern here that looks like a cup. And then your handle area here, where the last remaining sellers get shaken out. Had a little bit of volume down here in the handle area. Typically, you want to see kind of a low volume shakeout when the handle area is formed in a pattern like this, and then it's working its way higher, trying to take out a swing point here of 31.34, and it has not done it yet. And it looks like it's a little bit hesitant here because, again, it hit an intraday high of 31.23, but has reversed, now near its session low. Again, still trading up 1.9% to $30.16. But this is a company with pretty good fundamentals. You look in the fertilizer group in general, whether it's an Agrium, AGU, Potash, POT, CF Industries, you kind of you have the earnings and sales growth and growth prospects. A little tough to understand, but at least with Rentech, you go back in recent quarters, you do see outstanding, especially top-line growth has been accelerating in recent quarters. In the first quarter, the revenues were up 61% from a year ago. Earnings up about 467%. So we'll take a look at Rentech. Earnings are coming up not too far away, August 10th before the open. Rentech will be out with earnings, and mentioned CF Industries. Let's take a look at CF Industries ahead of its earnings report. They report on August 6th, so that's going to be after the close. Another decent technical setup here. Handle area forming. CF Industries down 1.6%, underperforming the market today to 197.14. So CF Industries, another breakout that could work here. Hasn't happened yet, though, so I'm not interested in buying it until I see meaningful signs of accumulation. Not seeing it yet. All right, folks, headed into the second break. We'll be right back. Ken Shreve with you.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, folks, to Breakout Investing on TFNN. Let's check in on the markets here. Got about 25 minutes left to go in Monday's session. NASDAQ Composite still down 0.4%, trying to come off its lows here. Down 0.4% to 2946, and the S&P 500 probably also trying to come off its lows here, and it's now down a fraction, almost 1 point, not quite, to 1385. So very, very mild selling in the major averages today. Volume tracking much, much lower than what we saw on Friday. Remember Friday on actually late last week on Thursday and Friday. Remember the Wall Street Journal reported near the end of Thursday's close that the Fed, was going to act and the market liked the sound of that. And then we had another day of accumulation on Friday. So you had two solid accumulation days for the market late last week on Thursday or Friday. The market is back in an uptrend here, which means the market tide is flowing positive, which means that it's okay to nibble at some longs here to see if they work, but not an environment where you can get overly aggressive, not with all the potentially market moving headlines that are looming not only on Wednesday but also Thursday and Friday with the jobs report. But volume in the market today tracking much lighter than what we saw Friday. Friday volume on the NYSE was above average. Good volume push on Friday. 900 million shares on the New York Stock Exchange. We're tracking probably 20% lighter than that today. Same with the NASDAQ. Volume Friday above average at just over 2 billion shares. So it was a good heavy volume gain for the NASDAQ on Friday. We're about 25% lower than that right now. So not much volume behind the selling. We're kind of in a holding pattern. Not surprising. So we'll see how the market acts for the remainder of the week. Let's check in on shares of MasterCard. Why don't we? MasterCard at last check was outperforming. It's up 1% today. MasterCard trying for a little mini breakout here, over $448 a share. It is trading at $441 right now, so it's not there yet. It is trading in the bottom half of its trading range today after early strength, but still a decent day of outperformance for MasterCard. And Visa still acting well in this market. Visa up 1.1% today. You got a little breakout going on in Visa, and again up 1.1% today to 130.61 for shares of Visa. Out of the two, I think I'd probably go for Visa at this point. Probably seeing a little more signs of accumulation in shares of Visa than I am MasterCard at this point. The one thing about Visa's chart that I'm not real keen on is this very heavy volume reversal here, where it tried to break out, it reversed in heavy volume, failed miserably, selling pressure in the stock. It's now kind of rallying back in light volume here. So I'm not sure how much this breakout is sustainable for Visa. It is acting well, I got to give it that, but you're looking at 3 straight days where volume, or 2 straight days where volume is getting quieter and quieter as Visa works its way higher. Let's check in on shares of LinkedIn ahead of its earnings report on Thursday. LinkedIn, very interesting company. I haven't had a lot of success with LinkedIn, frankly. It's a stock I've owned a couple of times, have been shaken out here, but they do come out with earnings Thursday. Another quarter of excellent bottom line and top line growth is expected for the online professional network. It's a high multiple stock. It's going to be very hard for it to move higher because expectations are so high, and it does have a very, very high PE ratio at this point. But there's as I mentioned, there's a very real growth story going on at LinkedIn. Not only a very profitable company, but also fast growing as well. I mean, you're talking annual earnings growth of 70, 80, 90% this year and next year. So well-run company here, still in a decent technical setup. It is trading near its low after early strength, so buyers just can't seem to make up their mind here. It hit an intraday high of 107.72, now trading at 103.87. So pretty clear swing point here of 110. If LinkedIn takes out the swing point in heavy volume, it might be worth a nibble, but I found this one to be a tough one to handle, and not surprisingly because it's a high multiple stock trying to make headway in a volatile market, so you tend to get these back and forth price swings here. But let's take a look at a weekly chart for LinkedIn, and we'll see that it is in actually a pretty bullish cup with handle pattern here. You can see the consolidation that started back here in April. This is actually, what a good cup pattern looks like. You've got the cup, it works its way higher, and then just a little kind of mild downward drafting shakeout here. So a pretty clear swing point of 109.90. We'll see if LinkedIn can attempt a breakout. Again, earnings this Thursday for the company. Altisource Portfolio Solutions. Big move for the stock today. It's holding gains nicely. ASP ASPS is the symbol here. Altisource up 4.8% today to 77.50. Altisource is a provider of real estate, mortgage, portfolio management services. Reported very nice earnings last week. So interesting. I'm not, big volume in the stock today, but the earnings report was last week. Profit was up 117% from a year ago to $1.13 a share. Sales up 55%. So a very good growth story going on at ASPS. Stock continues to perform admirably in a tape that's still a bit uncertain at this point. Let's take a look at ADS as well. This popped up in my radar today. Alliance Data Systems up 1% today to 131.86, also holding gains nicely today. Alliance Data Systems, they provide transaction, credit, and marketing services for retailers. Been consolidating gains for just over 3 weeks. This is a classic example of a base building stock. Let's take a look at a weekly chart for Alliance Data Systems. And one element I like already in this base, even though it's still early in the base building process, not a buy yet, I do like this support week right here. You can see it closed up near its high. There was some decent volume, a little bit lighter than the prior 2 weeks where it closed lower, but some decent volume, good support week. There were buyers in there supporting the stock, so that gives stock a pretty good foundation at the bottom of the base. We'll see if ADS can form the right side of its base here and maybe eventually attempt a breakout. It has made a big price move in recent months, but there was a good shakeout back here in during the late summer of 2011, where it did undercut a prior base. So you did get a little base reset here. So could be looking at a second stage base breakout for Alliance Data Systems. Good institutional quality growth name for sure. Let's also take a look at ASH. This is a name that I haven't talked about before, but I like its action. 4 straight up days, good solid breakout on Friday and heavy volume. This is what a stock under accumulation looks like. You can see these blue volume bars here. Totally have the upper hand over the red down days, so the stock is under accumulation. It's a specialty chemicals firm. They're responsible. They do Valvoline motor oil, among other things, but specialty chemicals is their game. Outstanding fundamentals here. Good solid breakout over $70.30. Another stock at $71.71 doesn't look to me like the train has left the station here. So. Good solid name, good solid breakout. Chemical stocks continue to work pretty well here. So we're talking about some gainers in the growth universe, and earlier in the show we were talking about the NASDAQ 100 and some lagging stocks in there. Priceline is another lagging stock in the NASDAQ 100. Let's take a look at Priceline. It's come back a little bit, down 68 cents today, down to 0.1% to 683.31. This is a high-priced stock. Earnings due August 7th, so not this week, but next week. Really, Europe is a major overhang on this company. They do a fair amount of business overseas. And Priceline does not look to me like it has the potential to be a new market leader here, especially since it was a big leader during the prior market cycle. But their bottom line and top line growth is gonna be there. Priceline is expected to earn $7.36 a share on August 7th when it reports. That would be up 34% from a year ago. Sales up 23% to $1.35 billion. So Priceline looks iffy at best ahead of earnings, but again, a company with a good track record of reporting good bottom line and top line growth. We'll probably see good bottom line and top line growth, but the market's reaction to the earnings report will be, of course, most important. Let's check in on shares of Salix Pharmaceuticals, a stock that had been acting very, very well in this market. Unfortunately, a big move downward for the stock today. It's down more than 12%. To 46.62. Really no signs that a negative headline was looming. The stock was under a little bit of selling pressure in July, had rallied back in recent days, but not a good day for Salix today. It's down big along with Progenics Pharmaceuticals, PGNX. U.S. health regulators declined to approve both companies' drug for wider use of their constipation drug, Relistor. So check in on shares of PGNX. It is likely taking a pretty good hit as well. Down 50% is this stock to $5.42. So Progenics loses about half of its value today on this news. Again, they have Salix Pharmaceuticals and Progenics are both involved with this drug. So both stocks under a lot of pressure today. Teradata, another stock here that looks to be very vulnerable ahead of its earnings report on Thursday. I mentioned LinkedIn is coming out with earnings this Thursday. So is Teradata. Base building stock here, but a stock to me that really looks like it's getting tired here. Possibly a good short candidate. TDC down 1.1% today to 67.50. Let's see if I have a weekly chart for Teradata. No, I didn't save one. But Teradata is just a good example here, trying to get back above its 50-day moving average and not having any luck at all. I've seen several examples in recent weeks of stocks, how that 50-day line turns into resistance. Want to pay attention when that starts to happen to a stock, and it could be happening now with Teradata. Their earnings are expected to be up 8% from a year ago, sales up 14% to about $660 million. So Teradata, this is a data warehousing play. Earnings this Thursday, August 2nd. Take a look at shares of Mercado Libre as well. Remember Mercado Libre? I wanted to talk about MELI, because this is a stock that I used to own. Mercado Libre down 8% today to 69.77. No news that I could see, but also coming out with earnings Thursday after the close. This is a company that operates an online marketplace and electronic payment platform in Latin America. I owned Mercado Libre all the way back in early March here, where the stock was trading out at around $95, $96 a share. It's now a $70 stock, and when I bought Mercado Libre back in February, I actually decided to get rid of it in early March because it just wasn't acting right. I started to observe its technical picture. Selling pressure seemed to be building. I realized that my timing wasn't quite right, so this was an example where I think I bought at 97.98 and I sold it at 93.94 for about a 4 or 5% loss. And cutting losses is a very important part of my strategy with Ultimate Growth Stocks. It's still a tricky environment out there, but to know that I own this stock at 97 and sold it at 93 and didn't want to mess around with a potentially bad situation here. Well, a bad situation did ultimately arise with Mercado Libre as investors questioned the company's growth prospects. It's now a $70 stock. So if I had held on, at $97 a share, and I'm still holding on to it at $69, $70, that's going to be a long way back to that $97 price level. Much better to always keep losses small, recognize when you're wrong. If the market tells you you're wrong, listen to the market, and you'll avoid a lot of heartache. So when you're investing in growth stocks, cutting losses short is just part of the game. You're not going to, when you pick 10 stocks in a row, it's rare when you're going to be right 10 times in a row. You can be wrong, 4 or 5 times, but if you're really right, that can more than offset the times you have to cut losses short. So I did that with Mercado Libre, and I was glad I did. Mentioned some of these NASDAQ 100 underperformers. Healthcare also under a lot of pressure today. Let's check in on shares of Alexion Pharmaceuticals. Big winner lately. Nice breakout last week, but look at this reversal today. Pretty ugly, actually. Down 4.2% to 104.37. This is what makes me just a little bit concerned. Really trying to stay optimistic about the fact that the market went back into an uptrend late last week. Trying to stay optimistic about that, but this action in Alexion Pharmaceuticals, you want to see growth stocks breaking out. You want to see them holding on to these gains. Some are doing it, but pretty bearish day for Alexion here. Again, down 4.2% to 104.37, and shares of Biogen, BIIB, also near session low as well. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kay Stalter, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the opening call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit TFNN.com today.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows. Plus, see all the charts as they happen live during those shows and have access to archives of those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, everyone, to Breakout Investing. Quick check on the markets here as we head into the close. The NASDAQ underperforming today, down almost 13 points, 0.4% to 2945. Dow and S&P 500 just kind of walking in lockstep here. S&P 500 down a point to 1384. Dow Jones down about 7 points to 13,068. So very, very mild selling in the market today. Mentioned volume was very heavy in the market on Friday, above average on both exchanges. We're very light on volume today, about 25-30% lower than the levels we saw Friday. So not much conviction behind the selling. It's just sort of a wishy-washy day for the market. Some economic headlines coming up this week. Tomorrow, personal income and spending for June. The Chicago Purchasing Managers Index will also be out for July. We'll also get the Conference Board's consumer confidence reading for July. That all comes tomorrow. Wednesday, the ISM Manufacturing Index. We've got the ADP employment change and also the two-day Fed meeting that we mentioned earlier. That meeting starts... the meeting starts Tuesday. On Wednesday, the meeting ends. So it's a two-day meeting. So we'll get the FOMC rate decision Tuesday afternoon. And then on Thursday, weekly jobless claims, of course. That always happens Thursday. We'll get challenger job cuts, factory orders for June, and then the always anticipated non-farm payrolls report for July. That comes on Friday. Estimates are for job growth of 100,000 in July. Job growth has obviously been very, very sluggish in recent months. Hopefully we'll see a good number on Friday. The market sure could use it, so we'll see. Taking a look at some earnings reports today, let's take a look at a big winner, or at least it was earlier in the session. Let's check out MWI Veterinary Supply. Wow. Okay, so big intraday trading range here. Hits an intraday high, opens at 106.18, hits an intraday high of 107.26. Longs can't be happy about the fact that it is now trading at 97.78, so a pretty nasty reversal in MWI Veterinary Supply. Still up 5.8% on the day because it gapped up in price, but now it's just basically sitting at its 50-day moving average here. Reverses well off its highs, still up, nice percentage gain today, but trading at 97.78. Its 50-day moving average is at 97.52. So kind of disappointing price action for MWI Veterinary Supply. This is a company that really has its own kind of niche market, doesn't face major competition here. They distribute animal health care products to veterinarians. Earnings were up 26% from a year ago to $1.15 a share. Sales up 35% to $554.7 million. After the close today, let's take a look at Cirrus Logic, of course, a big supplier to Apple. It makes chips for the Apple iPhone. Cirrus Logic set to report earnings after the close. Surprisingly, earnings are expected to be down 13% from a year ago to 24 cents a share. Sales up 10% to $100.9 million. Cirrus has been rallying lately. It is approaching a swing point here of just over 30. Shares are outperforming nicely today, ahead of the results, up close to 3% to $29.81. So Cirrus not looking too bad here. Recent price and volume trends in its chart look pretty good, ahead of earnings after the close. Let's take a look at shares of Herbalife as well. Also reports after the close today. It's a network marketer of weight management, nutritional supplements. Earnings expected to be up 9% to 96 cents a share. Sales up 11% to $979 million. Shares of Herbalife, after early strength, have a nice little reversal going on here too. Now down 4% to $51.67 ahead of its earnings report after the close. And also Seagate Technology. Remember last week, Western Digital, big earnings, big gap up in price for both stocks. Seagate reports after the close as well. STX. All right, folks, we'll be back tomorrow with another edition of Breakout Investing, 3 to 4 Eastern every day. Coming up next, the Tom O'Brien Show, 4 to 6.
Time is the great equalizer of all mankind. Time doesn't care about winner